A warm welcome to our today's webinar. My name is Stephan. I'm the head of advisory at PAC and the host of today's webinar. Please be aware that we will record this webinar and make the recording and the slides available for you in the coming days. You're all going to be muted for the entire webinar. However, during the presentations, you can ask your questions using the Q&A sections at your Q&A section at your screen. And now I'm pleased to introduce our today's lineup, starting with our unrivaled chief analyst, Christophe, providing an update on the latest business performance of the leading IT services providers in Europe and by selected countries. Then I'm very happy to welcome on board our principal analyst, Nick Mays from the UK, who will present an update on the overall IT services deal climate and recent wins across Europe. And last and hopefully not least, I will provide some use cases from our daily advisory work that we are doing together with you. So first, I will show some insights on how you can optimize strategic business planning with our customized market models. And second, I'll also give you a brief overview on how you can develop your pricing strategies and rate architecture for successful price negotiations by using our recently published IT services rates databases for Germany, France, and the UK. Then after the presentations, we will start with Q&A. And in case we'll run out of time, don't worry. We will contact you to talk about any unanswered questions in the coming days. So then I would say, let's get started. Christophe, the stage is yours.
Thank you, Stephan. So today I want to present some recent rankings that we published over the last months. The top three you see here are, for me, a kind of appetizer, reminder for all our city customers that we publish rankings in 24 geos. So we publish vendor rankings from top 10 to top 100, depending on the segment, on the geography, for software vendors, including segments like application software, SaaS, or cloud platforms, for IT services suppliers, including infrastructure services, application services, BPO, subsegments like infrastructure outsourcing or application management. On top of that, we publish rankings by industry, on the one hand for software and cloud platform vendors, on the other for IT services suppliers vendors. And we publish ranking for our clusters among the cloud, security, analytics and AI, digital customer engagement, SAP services, Salesforce services. And finally, we cover further countries on a custom basis for countries like Brazil, Canada, Australia, or Japan. So on this slide, I present our top three IT services, excluding BPO, in multiple geographies, as we publish them in CT, but again, CT much longer. And starting with EMEA on the left hand, then in 13 Western European countries, and for comparison in the USA. As mentioned, you will find many more and much longer rankings on city.packanalyst.com. You see the link on the right and below. So looking at Western Europe, the first lesson is that the top three vary strongly between the countries. Accenture, the leader at EMEA level, leads in 3 countries, Italy, Switzerland, Spain, is in the top 3 in 11 out of the 13 countries we mentioned here, in the top 5 in all 13 countries covered in this slide. Capgemini, the number 2 at EMEA level, leads in 2 countries, France and the Netherlands, and is in the top 3 in 5 out of 13 countries, in the top 6 in 8 out of 13 countries. IBM, the number 3 at EMEA level, is in the top 3 only in 2 countries, and in the top 10 in 8 out of the 13 countries presented here. Now, if we look at Indian heritage vendors, TCS is number 4 in EMEA, number 4 worldwide. They are in the top 10 in 7 out of the 13 European countries mentioned here. Infosys in the top 10 in 5 of the out of the 13 countries. Cognizant 3 of 13. HCL 2 of 13. Wipro in 1 of 13. By comparison, in the USA, 3 out of the top 6 are Indian heritage providers. Among the providers with the strongest pan-European presence, I would also mention Kyndryl, the European 9 top 10 out of these 13 countries, NTT Data and CGI appearing in 4 countries each, and Soprasteria appearing in 3 countries. By comparison, Deloitte, who is the number 2 in the US and number 3 worldwide, our number 8 in EMEA appears in the top 10 only in the UK. They are number 6, and in Denmark, number 8. Besides these 3 global vendors, we see that domestic vendors, and here I would say some of them being mainly focused on the home market, like engineering, Team, Swisscom, NRB, Netcompany, or Bouvet. Many of them international, being international, like Soprasteria, CGK, T-Systems, Intra, or Tieto-Evry. So we see that domestic vendors still hold substantial market shares in their respective home market. So let's start with France. The top 2 in France is in French hands, and 4 out of the top 5 are French. After Cap, Sopra, and Accenture, we have Orange and Atos in the top 5. In Germany, T-Systems, together with Deutsche Telekom, leads the German market. By the way, if we would include BPO, they would just be behind Accenture. The UK tends to be an exception. There is no domestic vendor in the top 3, not even in the top 15. And the UK is also the sole European country with an Indian vendor, TCS, as a leader. TCS took the lead from Accenture in 23. In Italy, 4 domestic vendors are in the top 5, so the number 2 to 5, with engineering, Team, Reply, and Almaviva. In Switzerland, we have Swisscom, number 2nd. In Belgium, the top 3 is in domestic hands with CGK, Kronos, and NRB, and Soprasteria is now the first foreign supplier in Belgium. In the Netherlands, the top 4 is in foreign hand, Capgemini, Accenture, TCS, and Ethos, and then followed by 2 Dutch vendors, KPN and Conclusion. In Spain, we have Indra with its IT subsidiary Minset, ranking 2nd. In the Nordics, we have Tieto-Evry, leading in 2 out of 4 markets, Finland and Norway, and ranking 3rd in Sweden. And we have Netcompany leading in the Danish market, and Bouvet in the top 3 in Norway. Besides the disparity between the countries, the low concentration remains for me quite impressive. Only in 5 countries, France with Capgemini, Italy and Spain with Accenture, Finland and Norway with Tieto-Evry. So only in these 5 countries, the leader has more than 10% market share. And in 5 out of 13 countries, the 3rd largest vendor has less than 5% market share. Let's move now to a comparison between 2019 and 2023. So 2019 as the last pre-COVID year. Don't worry, I will not go on every ranking. However, I wanted to mention 2 trends. So on the one hand, the fall of IBM following the disposal of Kyndryl, and the fall of infrastructure outsourcing focused vendors like DXC, Fujitsu, or Ethos, which were stronger, as we can see in the 2019 top 3, while the application services focused vendors like Accenture, Capgemini, Deloitte, NTT Data, or TCS won market shares and move up in the rankings. On the other hand, we have monitored the emergence of build-ups in many countries, so groups growing very fast through the takeover of numerous, mainly small companies. The most prominent example in this page is Kronos. They are now the number 2 in Belgium, and they raised the revenue by over 60% within 4 years in spite of the COVID crisis. We see similar moves in many countries with companies like Conclusion in the Netherlands, Valentic or Germany. For sure, most of the established leaders, including Accenture or Capgemini, made quite a few acquisitions over the last years. And companies like Reply or Devoteam also grew through many targeted acquisitions and still manage them in a quite decentralized manner instead of integrating them. However, these companies are developing strong synergies between the different business units. While companies like Kronos are at the border between a real IT group and a collection of participation in IT companies. So more, for me, an investment fund approach. And my question mark, is this model sustainable in the long run? And will investors value the investment in line with the expectation at the time of exit? Finally, growth rate was strong in 21 and 22. It was already much lower in 23, with the top 10 in EMEA growing only 4% in calendar year 23, in Europe, and only 1% in the USA. This year, growth in H1 was even lower in Europe, with quite a few companies reporting a decrease in local currency, at least on an organic basis. And the expected recovery in H2, so in the second half year, will probably be much softer than originally forecasted. Thanks for your attention. And as mentioned, there is much more in CT. You have the link on the slide, or we have it on the slide before. And now I will give the hand to Nick Mays for his review of deal trends.
Thank you, Christophe. Good afternoon, everyone. Great to have the opportunity to talk you through one of the areas that I'm responsible for at PAC, which is our analysis of software and IT services deal signing trends. Many of you taking part in today's session get a really good view of that through our weekly newsletter. And I would urge anyone who's on today's session who hasn't subscribed to what is a free service to follow the links through our website to gain access to a weekly view on all the major deals that we track in across Europe and worldwide. Now, if you look at the volume and value of deals that we tracked in the first half of this year, I don't think it will come as a big surprise that the market has slowed down compared to the year ago period, so first half of 2023. And to build on what Christophe was just saying, as we move through Q3, I think that our view as PAC analysts is that while the market has perhaps stabilized, we're still waiting for clear signs of acceleration in demand across many areas. And this has been reflected in the recent financial results that we've seen being published in the last couple of weeks. I would say it's a pretty even 50-50 split between those vendors that are nudging up their guidance based on pretty strong pipeline performance and those that are easing it down a bit as well. It remains a very mixed picture. Now, what I've done on this slide is highlight some of the overarching themes that we see today in the market right now. I think it's fair to say that the number of mega deals, so those with a value of 100 million euros plus, the number of opportunities we see at that scale coming to market has plateaued. It's not dried up completely, and we'll talk about a couple of examples shortly as well, but decision-making cycles remain long, and I don't think that the current economic environment is going to change that picture in the coming weeks or months. Again, just to touch on some of the other key underlying trends that we see, there remains a clear focus on unlocking short-term gains in terms of cost savings. And we're seeing many of the successful vendors on bids being those that are commercially creative to help clients release those savings in the early months of longer-term engagements. And lastly, we ran some analysis across the hundreds of deals that we've tracked in the last quarter or so. And if you look at the kind of the three main themes that we see represented the most in that sample of data, I would highlight SAP modernization, cloud optimization, and cyber resilience as being three of the key themes that we see across the deal environment today. But I don't want to paint too negative a picture of the pipeline as we see it right now. And I think there are some very interesting opportunities that continue to come to market. Now, one example I wanted to pick out was this recent deal between Wipro and the merchant banking group Close Brothers. And I think this is indicative of a few things that we're seeing in the wider market right now. Firstly, I think it represents the expansion of an existing relationship between the two parties that's really gone from a more tactical kind of engagement to what I would consider much more strategic. I would also say it's a good example of a company in a sector that historically has not been a huge market for the externalization of IT services, specifically within the merchant banking segments. They've tended to do quite a lot using internal teams. But I think what we're seeing here and what we're seeing across a number of other sectors is that the level of changes that they're experiencing in customer demand, the shifts in the competitive environment, changing regulatory requirements, they're reaching a whole new level and forcing a much more ambitious approach to changing the business and enabling that through technology change as well. And lastly, if you look at what this company is trying to achieve through the project with Wipro, it talks about wanting to become more secure, resilient, and sustainable. And I think that, along with, as I talked about earlier, unlocking those cost savings, these are the kind of outcomes that pretty much all businesses are looking for from their IT services partners as we move through Q3. I also wanted to highlight some other deals of note that I think highlight some of the current trends in the market. Firstly, and I'll come back to this topic shortly, but we're seeing a lot of companies look to work with services partners to help them rebuild momentum with their AI strategies. I think a good example here is the electronic retail group Currys, which has announced a very big commitment to the Azure stack to support its efficiency and sustainability targets. But it's also working with Avanade, the Avanade division of Accenture, to help it make the most out of Microsoft's AI capabilities, and particularly Gen AI capabilities. And we've heard a number of vendors talk about how they're increasingly being tasked with helping their customers win hearts and minds by helping them really start to deliver signs of progress with their early AI initiatives. Secondly, I think we're seeing some really interesting collaborative engagements between IT services vendors, platform providers, and industry companies as well to solve some of the really big sector-specific challenges that societies and industries are facing over the coming years. One example I've flagged up here is the tie-up between Sopra Steria, Mercedes-Benz, and Transport for London, where they're looking at how cities can optimize future traffic flows. Thirdly, we're still seeing some very large sums of money being committed by particularly government departments to tackle their dependence on legacy platforms. And just this week, we've seen Capgemini announce more than £500 million worth of business with the UK tax collector, the HMRC, as it struggles to modernise its core finance platform. And lastly, on the sustainability side of things, so we did a different session a couple of months ago looking at sustainability and how a lot of negativity has built up around the progress of corporate programs. However, we do still see some interesting opportunities coming to market, particularly in sectors like manufacturing, where we're seeing investments in platforms supporting core operations management and product design, with the likes of Siemens in this case, and also Dassault, I would say, to support the complete transformation of production strategies as they shift towards more sustainable models. Now, the next slide builds on something that we've talked about quite a bit in other sessions, and also the Close Brothers example earlier. And this is about how mid-size organizations, so typically those with between 1 to 10 billion euro annual revenue, are becoming a really important source of particularly greenfield opportunities that are driving the market. Now, we've added some logos of organizations that fall into this bracket on the slide. And interestingly, Infosys actually secured business with 3 of these companies, so Sector Alarm, Unex, and Colt in recent months. And I think it's no surprise Infosys is just reporting one of its strongest ever quarters in terms of pipeline performance. And you can see some of the kind of features of these these deals that vendors are signing with mid-size organizations on the right. I think the key for particularly bigger vendors who are going after this marketplace is to get your pricing levels and your go-to-market approach right, and ensure that you're providing that level of client intimacy that the businesses operating at this level of the market are really value. Now, I mentioned AI earlier, and it's one thing that we're tracking very, very closely is how AI is reshaping the kinds of deals that are coming to market. And I think, you know, what we continue to see are businesses looking to their existing main application platform providers, where, you know, a lot of their corporate data is already being managed and processed, to really lead the way in terms of applying AI tools and services on top of that. But I would also say that, you know, the underlying appetite for harnessing the potential of AI is strong. And in particular, in those sectors like CPG, retail, financial services, where they've already got this pre-established culture and approach to managing and harnessing data successfully across the business, we're seeing companies take, you know, really meaningful forward steps in their work with some of the big AI platform partners. And I'd call out this example of BNP Paribas in France, and the work they're doing with the likes of Mistral, as well as IBM Watson X, as one really good example there. So one of the other key areas that we regularly analyze at PAC is the performance of the big global enterprise platforms and the changing shape of the opportunities for their ecosystem partners. I mentioned before that the SAP attached services market is very dynamic, as you would expect. It's a big source of deals across all regions, and we're seeing more and more businesses, you know, reframe the case for moving towards S/4HANA about much bigger transformation programs rather than being kind of pushed there by the support deadlines. But I wanted to also highlight some of the other platform providers that we see performing particularly well, and some of those are quite sector specific. So Guidewire has been a leader in the insurance space around policy and claims admin for a long time. They're one company that's recently increased their guidance for the next couple of quarters after a very strong performance so far this year, and some big wins with the likes of CSOB in the Czech Republic. I'd also highlight Kraken in the utilities market. It's hugely successful. Accenture is in the process of helping it with a big implementation at EDF. And it's also been selected as one of Kraken's first real sort of global SI partners as well. And Kraken's also extending its reach beyond customer service and utilities into areas like water companies, ISPs, and managing processes in asset and field services management too. And lastly, Blue Yonder, I would call out as perhaps the big success story as companies look for big platform partners to transform their supply chain strategies. And it's had some really good recent wins with the likes of Otto, Waitrose, and Avon International as well. So just to finish off, I think another common feature that we see of all these big platform organizations and how they're working with their ecosystem partners is that they're continuing to extend their reach into their clients' businesses. And a great example of that is ServiceNow, which, I mean, just yesterday, I think, reported very, very strong growth of well over 20% at its most recent quarter. And a big part of this is, you know, its evolution away from being the core IT service management platform to being the real sort of underlying workflow engine across the business. And this is very much the role it's playing alongside BT in the telecom space and many of its other clients as well. And I think what this means for IT services partners that are working with these platform companies is that it's never been more important that they're engaging with this broader stakeholder landscape and that they're able to really join the dots between what the technology platform can do and what the specific needs are of different areas of the business. And I would say that, you know, the companies that Christophe highlighted as the winners in the different markets, most of them are the ones that are really getting this aspect right now. Just before I hand on to Stephan, what I would say is, you know, I spend pretty much every day looking at the deals landscapes and trends. If anyone on this call would like, you know, a deeper dive into a specific sector or area of the market, I'm more than happy to do that through a follow-up conversation. So please feel free to reach out after the session. So I'll hand over to Stephan. Thank you.
Thank you, Nick. Very interesting. So in my part, I'd like to talk about how we do customized market models for IT services providers to optimize internal business planning processes. And some of you already know our decent SITC database, providing tons of segment-specific market figures and growth rates, but often they fall short because they are not totally aligned with your specific offering architecture and related granularity. So why does it make sense to streamline business planning with a consistent data model? First, what we see in our conversations, that the level of offering complexity is pretty much increasing. If it's the evolving world of AI-related service disciplines, or the manifold services coming along with the major application or cloud platforms, you name it. And second, with a consistent market model, you can better allocate your investments into skills and resources based on the data you receive. And as a consequence of that, this is also fueling your competitive edge for you as a professional IT services company. On top of that, the increasing complexity of the offerings also has higher requirements on the scalability of the data model. And with us at PAC, we are used to adapt offerings, verticals, or additional client groups to your needs, scale it up, adapt it whenever it's needed. So what I can say is our customized market models are completely tailored, and they're also mitigating risks of not properly investing your money. And all in all, we do roughly 20 plus customized market models projects each year, having gained almost 50 years of experience in translating your specific taxonomy into a data core that is validated by our SITC platform. So I would say this is a unique part, especially for the IT services providers of this world, to think of working with us in this regard. In my, oh, I'm sorry. The what, and that is a picture, I will open it a bit more clearly. To sum it up, we create the market model, we have the data core as described, we have your view on your client, on your offerings, and your go-to-market structure. And when we create it, I would say there are two options. Not only the option one that I was describing, the operational business planning purpose that you all have every year to streamline planning and investments, but it's also a good occasion to use it for the different strategy reviews that are happening within your company. And I have many discussions with you and the community where we use the model, where you use the data to really think of white spots, sweet spots, the right priorities, and what does it mean for the 3 or 5 year strategy of the company. So two benefits that I clearly see in the projects that we do. And how do we do that? As I said, we have a lot of experience to understand your offering architecture and go-to-market models and the strategy behind by the geos that we already cover, but maybe also by extended geos that we do not have in SITC, by the vertical view, by the client sizes and target groups that you tackle. And after a decent workshop phase where we discuss and streamline, we start to create the structure as the future view on the offering structure. We go into the modeling which is pretty intense, as you can imagine. We have a high complexity as IT services companies tend to offer a wide range of services to their clients. And then we do a decent quality insurance process to streamline everything, to bring everyone together, to give us insights on what we gather throughout the discussions we have with the market. And we can deliver the customized market model based on your tailored needs. In my second part, this is a different angle from our advisory work that we do. It's more on pricing. And maybe many of you or some of you know our IT services rates databases that we are publishing each year. It's a decent, let's say, tool and database that is providing a comprehensive comparison of over 15,000 rate cards and data points available for France, Germany, and the UK. And what are the key benefits of using it for you as an IT services provider? First, you can compare your rates with industry average using it as a benchmarking tool. Second, you can raise your rates of new and existing contracts to increase TCV and profitability if you have been maybe too low. And you can also gain your customers' trust in this type of negotiations by showing them that your rates are in line or even below market average. And to give you a bit of background, how do we do that? It's based on a decent survey with end user organizations, especially procurement people, but also business people that are buying IT services from the market. Then we enrich that with different expert discussions with you in the vendor community, but also within our analyst community to make further assumptions, to streamline the data that we gather, and then we put it into evaluation phase to provide average pricing, always for the current year, the last year, and the year to come. And we are doing this since 2013. So now it's the 11th year of our updating process of this rate card comparison. So I would say we also have gained a lot of experience in how to do it and how to deliver it. And how is it structured? So segment-wise, we have one part in the database that is more or less related on or to infrastructure-related services. And you can see on the right-hand side the different segments or job profiles, so to say, on how we have structured it. And all the job profiles are drilled down by different experience levels. So from a junior up to a senior to a very senior skill. Also by verticals. So everything can be drilled down and extracted in this view. The same, we are doing it for application-related services. So you can see the different job profiles or roles on the right-hand side and how we cluster them. And also here we have the experience levels attached and also the vertical view on the different rates in different industries. On top of that, we also have a decent look into daily rates by platform and solution areas. Here you can see we are tracking the major platforms, even if it's from the cloud and hyperscaler world or the big application platforms, and also the solution areas on the right side. And we are drilling that down not only by experience level, but also by service value chain. So is it a rather IT consulting or a development or an integrating part or a testing part of the project, and also by verticals. And all these dimensions that I was mentioning here are based on estimates on the onshore rate on site in the specific country. So we have it for Germany, France, and the UK. And I guess that some of you will raise the question, so yeah, but what do you do with the dominating blended rates discussions that we usually have? Because in less cases, it's a pure on-site or onshore project. So to fuel that up with the view on offshore rates that are dedicated to the country that we are tracking onshore, we also have the daily rates database for offshore. And it's in the same structure. So you have a drill down by experience level, service value chain, the different solutions and technical dimensions, and the origin in the regional view that you can see on the right-hand side, where it's going to be routed either to Germany, France, or the UK, to make a calculation where you can easily put in all this complexity the rate together onshore with offshore to have a blended rate on your desk and for your negotiations. So we have a lot of projects in this regard where we advise vendors and help in negotiations how to use the database, and also be my guest to follow up with any of your questions that you might have to the two options that we offer in this advisory world. That was my part. Thank you for this. So I'm just quickly checking the watch. We have 9 minutes left, and we would now directly start the Q&A. I will check our Q&A bar and try to find a structure and then ask the questions into the round. So one question, I think it's for me. Do you plan to launch a similar rates pricing database for Benelux? I can say no. I think we will stick to the 3 countries that I was presenting in the standard, but I think we can maybe have a chat offsite, because what we do, but then it's more like a little project, we can extend our rate average benchmarking also to other geos. Can we get a copy of the presentation? Yes, for sure. So as I said, in the coming days, we will put everything together, the recording and the slides for your use. Then I have a question, I think it's for Nick. One guest is asking, do we see increasing pipeline or deal dynamics for upcoming Q3 and Q4?
Yeah, I think both myself and Christophe talked about, the mixed picture in the market at the moment right now. And as we look ahead for what's left of calendar 2024, of course, we've got a very close US presidential race, which is on the horizon, which not only disrupt decision making in the US, but if you look at a market like Germany, which is very export dependent, it will surely have some impact on some of the decisions that are made from the big manufacturing organizations in those markets as well. I think there will remain some uncertainty for sure. I'm not expecting a huge resurgence in the coming months, but the feeling that I get is that we've at least reached a point of stabilization, and there are some business critical topics which customers across all industry sectors cannot ignore any longer if they are to meet, pressing deadlines in terms of either, the legacy support being retired, but real business issues like we need to start reporting on our decarbonisation story. We need to make that happen. We need to start investing in the underpinning, enabling technology that's going to make us compliant with the growing regulation that's coming into place. So I think this flow of opportunities coming out from particularly the mid-sized sort of tier 2 organizations is a trend that we see more and more vendors kind of pivoting towards and changing their go-to-market approach from looking at big industry sectors to focus more on subsectors and different niches within those markets. I think that's going to remain a pretty strong seam of business to mine over the next few quarters.
Thank you. Then next question, is your rate benchmark aligned to different industry segments like financial services versus manufacturing? Yes, it is. So we are in the standard, we are providing 5 industry clusters where you can drill down all the different dimensions that I was showing, not all, but many of them by industry. Then I think this question is for Christophe. One guest is asking, who has been the fastest growing company within this European view and the top 3, not everyone, but maybe in the top league of players in the last half year or maybe 2023, I don't know. You're on mute.
Thank you, Stephan. Let's start with 23. First of all, at European level, the 2 winners in the top 10 were Sopra with highest growth 14%, which was not only organic, and Deloitte with 12%, mainly organic. So this is at European level for the calendar year 23. If I look at the countries here, so we had a few really high growth like Accenture in Austria, like Cancom in Austria or Sopra in Belgium, but mainly linked to acquisitions. If I look at more organic growth, I would certainly mention CGK in Belgium with nearly 25% growth, Sopra in Norway with over 20% growth. So there are 2 companies which come in mind when talking about the highest growth. And we had strong growth, also performance in Spain, like Accenture, Inetum around the 15%. By comparison, if I look at the first half of this year, right now among the companies which reported, Infosys is posting the best performance in Europe in H1. But we have quite a few companies with decreasing or flat revenue, and we are only at the beginning of the season. But it's clearly 24, at least the first half of the year is very, very tough. We should not forget that the first half of 23 was very strong in Europe. It was not the case in the US. In the US, the market was already slow in H1, but in Europe, H1 was still very good. So we are comparing H1 24 with a strong H1 23. We will compare H2 24 with a rather weak H2 23. And what we see is that the large companies which engage in huge transformation programs in the second half of 2020 or in 21, so let's say the COVID-generated transformation projects, these projects took place in 21, 22, partly in 23. Right now, the big companies are more in the optimization mode. What Nick mentioned is that right now we see more traction from the mid-size, and I would say the upper mid-size companies, which simply need to catch up. So these companies started the transformation later than the big ones. The big ones are in a pause modus, on optimization modus right now. The SMEs are pushing. So it means also that we will see in the tier 2 and tier 3 certainly some better performance than among the top 10 market leaders.
Okay, great, thank you. So I would say last question, and don't worry, every question that we have not answered today, as I said at the beginning, we will answer it separately in the coming days. So last question, I will choose it. Hold on a second. As economics or economic times are tough, are there different commercial models outside T&M and fixed price that buyers are expecting?
Maybe I can pick that one up first of all, Stefan. I think Yeah, one of the things that we've always found through cycles when times get tougher is that procurement leaders play a stronger hand in terms of scoping the kind of commercial relationships that they engage with the provider, and they're always looking for the best price, and that remains a very important factor. But what I think we're seeing now, and I'll go back to the example of how ServiceNow is not just selling an IT service management platform to the head of IT service management, they're selling it to multiple departments and line of business leaders across an organization. And what these individuals are looking for are business outcomes. They're looking for commitments to achieving either cost saving targets or process improvements, or upticks in customer retention, or reductions in the time that call center agents have to spend on calls with customers. These are the outcomes that they're looking to gain through their engagements with the platform providers and their IT services partners. And they really, really want those services partners and platform providers to commit commercially on delivering those outcomes. Now, this, as we all know, is really, really difficult to do, particularly if it's a new organization that you're engaging with. You don't quite know what's happening beneath the surface and how particular processes are run, what their kind of health is. But certainly, I think a big factor behind the growth across some of the more advisory-led organizations, the big consulting firms, has been that they've been able to commit to these sorts of targets as part of some of their engagements. And that's been a key factor in them securing deals versus perhaps some businesses from a more traditional system integration background. So I think there's clear appetite from the buy side for commercial innovation. It's always been hellishly difficult to deliver from the vendor's perspective. But I would say over the last 12 months, I'm seeing more and more interesting examples where vendors are really putting some skin in the game and putting the money where their mouth is in terms of committing to outcome delivery.
Yeah, I agree. And we have outcome-based pricing model discussions already since a long time. So it's kind of a wave, and in times of uncertainty and maybe recession, it's getting more interesting again. Anyway, so thank you to all of you for joining us today. We wish you a great summer ahead, and stay tuned with us. And thank you, Nick. Thank you, Christophe. Take care. Stay tuned. Goodbye.